The broadcast is now starting. All attendees are in listen-only mode.
Good morning or good afternoon, everyone. Welcome to this episode or session of our 2008 webinar series put on by the Wyoming Women's Business Center. Today we're going to look at what it takes to calculate the true cost of an employee. Look at the different things that are required, different things that are optional, and give you a calculation template or a basic calculation that you can look at to try to determine what it might cost you to put on employees. You'll notice in the GoToWebinar panel or control panel on the right side of your screen is a question box and a chat box. All participants are muted to cut down background noise. So if you have questions or comments, please type them in those areas. I forgot to introduce myself. My name is Waldo Smith. I am the Director of Micro Lending here at the Wyoming Women's Business Center. And assisting me monitoring those questions is Christine Langley, our business counselor here at WWBC. So feel free to put those in. We do want to remind you that this session is being recorded and it will be uploaded to our YouTube channel at some time later this afternoon. If you'd like to view that, you can go to YouTube, type in Wyoming Women's Business Center, and you'll see it along with all the previously recorded webinars that we've done. Make sure you subscribe to check out those webinars and any future ones that we may have. You can also go to our website, wyomingwomen.org, and look for us on Facebook. At the end of the presentation, as you exit the webinar series, you will be sent a survey or presented a survey. We do ask that you complete those. It'll only take a couple of minutes to click through the answers. They are very important to us. They help us provide valuable information to our funding partners and help us to improve our webinar series. So again, my name is Waldo Smith. I have roughly 27 years experience in lending. I spent 4 years doing financials for a nonprofit and then joined the Wyoming Women's Business Center 3 years ago as the microloan director. And I'm happy to be giving you this information today. So let's get started. The mission statement for the Wyoming Women's Business Center is we promote economic equality in Wyoming through successful business ownership. We do that in a number of ways. We are a nonprofit organization. We help you as individuals and business owners either start or expand within the state of Wyoming. We strive to advance financial self-sufficiency by promoting economic justice and equality throughout the entire state. And here are some of the ways that we can help you as a business owner or a potential business owner. We do provide counseling both before startup and after startup. We can help you with setting up a bookkeeping system, doing financial projections, writing a business plan, marketing strategies, doing market research, those sort of things. We offer networking opportunities. We do sponsor roundtables around the state. We have one in Laramie, one in Torrington, one in Cheyenne, and one in Jackson on a monthly basis. And then these webinars also as a part of that program. We do work with artists to help them view their skills and develop that as a business, how to sell the products that they make. We offer credit builder loans for those who have no credit scores or are looking to rebuild a credit score. We're promoting our individual savings accounts or IDAs, which is a matched savings account currently. They can be used for a variety of ways: start a business, purchase a home, or continuing education. And you can find information about that and our microloan program on our website. All of our assistance is at no cost for counseling. There are some costs associated with the microloan program, but they are if the loan is actually approved and made. We do have to recognize our funding partners. The programs we offer are paid for by funds we receive from the U.S. Small Business Administration, the Wyoming Business Council, and the USDA Rural Development. My objectives, or our objectives today, is to look at why and when you would want to even think about adding an employee to your business. We're going to look at what the required benefits are that you have to provide as a business owner. We're going to look at optional benefits, things you may want to look at to consider offering in order to attract and retain quality employees. We're going to do a simple cost calculation, and then we'll have a time for question and answers afterwards. So you've got your business started. It's going well. You're making nice money. Why would you want to add an employee? There are a couple of reasons why. If you have an additional employees or more people doing what you're doing, it equals more billable hours or more billable services or more things being sold. So more business equals more money. You can increase your gross income by having people help you. Poor time management can cost you money. What do I mean by that? Well, if you are jumping from one task to another task, say you're working on your books, a customer comes in, you have to stop, work with them for a little bit, come back to your books, something happens, you have to go clean up a mess in your storefront, and you're constantly changing and not being able to focus on one thing, then your time management is not its most efficient. And so having someone that you can delegate tasks to can help improve that. And you can maximize the number of hours in a workday by assigning tasks to other employees, having people do things for you so you can concentrate on certain things. Having an employee can help you work smarter, not harder, because you can divide tasks and focus on things that are the most important. Having employees can bring on less stress upon yourself. But I did put a question mark on that. If you are someone who is capable of delegating, it can mean less stress. If you aren't a very good delegator, it may mean more stress for you to have to watch over an employee. You have to judge that for yourself. But ultimately, what we want to see is more time with family so that we don't have to spend as much time in our business doing our business. And not properly estimating what an employee is going to cost you can be costly in itself. So that's the purpose for this presentation today. We want to, rather than say, okay, I'm going to pay someone so many dollars an hour and that's what it's going to cost me. No, we're going to find out what the true cost is. Cost, typically we think, is hours per week times the hourly wage, but there's so much more involved. And that gets into our benefits. These are the required benefits that you have to pay as an employer when you start hiring people. And I'm talking about an employee, not a contract laborer, an actual employee. You have to pay Social Security tax, you have to pay Medicare tax, you have to pay federal unemployment insurance, state unemployment insurance, and workers' compensation. Well, how much do these cost? We'll take a look at them individually. Social Security is 6.2%. You withhold that amount from the employee's paycheck, but you also, as an employer, have to match that and pay that. So the government receives 12.4% of whatever you're paying the employee. Half from them, half from you. The contributions apply to the first $128,400 in wages an employee earns. So if you've got a part-time or a full-time employee, you have to pay Social Security in until their wages exceed this $128,400 threshold. The maximum amount you would need to pay on any one employee is $7,960.80. That's 6.2% of the maximum amount. So that's one. The next one is Medicare. Employers and employees contribute equally to this as well. You withhold 1.45% from the employee's wages. You pay in 1.45% from your expenses, and there is no maximum wage amount for Medicare. So whatever the employee earns, you're still going to pay 1.45% per year from every paycheck that they receive. And so an example of their wages are $2,000, you're going to pay $29 in and withhold $29 from their salary. Unemployment insurance is paid fully by you as the employer. It is 6.2% on the first $1,000 of wages paid. And then after the employee has earned $7,000, you no longer have to pay any more in. So the maximum per employee annually would be $434. The unemployment rate in 2016, we've got a graph here that shows by state what the percentages were, and a percentage of civilian labor force in each state. State unemployment insurance is the same way. You pay that amount into the state. For newly enrolled employers, someone who's hiring people for the first time and just getting into the program, the tax is based upon a percentage of your what your industry standard is. It's set for the first 3 years. So they look up what business or industry you are in, determine what the standard rate is, and that's what you pay. After 3 years, it's based upon your annual taxable wages and any claim history. Each year you report how much you paid in wages to employees. The state then determines what your rate will be. And if you have an employee claim unemployment insurance because you have fired them or let them go, then that factors in determining what your premium is going to cost. Workers' compensation is based upon industry. So whatever industry you're in, they determine what the base rate is. And it's the base rate times experience modification rating less any discounts. Again, they take a look at over a period of time, have you had any employees get hurt and claim benefits from this insurance fund? If you have, then that factors into the experience modification rate. It may increase your premium. If you've had a good history and there's certain programs you qualify for, then they may subtract off discounts to reduce it. It is a form of insurance for employees, and it provides income and medical benefits for those who are injured on the job. Wyoming does have coverage through the state, so you would talk to the people at Workforce Services, Wyoming Workforce Services, to determine what your insurance would be and to obtain that insurance. So those are the required benefits. Now we're going to look at optional benefits. These are things you can offer employees. You are not required in any way to offer them. But if you want to attract quality employees and retain quality employees, you may want to consider some of these, if not all. It can be expensive to do all of them, but you may want to consider some of these items just to help retain them. The benefits are totally your discretion, but it's important in attracting and keeping quality employees, like I said. If you have over 50 employees, that's a cutoff point, then you fall under the Family and Medical Leave Act, and you are required to offer some of these. The Act states you must provide 12 hours of unpaid leave for family or medical emergencies. And some other items as well. Here's some more additional optional benefits you can provide. Notice of the percentage of employees offering paid family leave and flexible workplace benefits. It's a major issue, especially for women in the workforce. And at the Wyoming Women's Business Center, we would encourage you to consider offering some of these benefits to attract and train quality employees. So what's the difference between pregnancy leave and parental leave? These are some of the most common benefits that are offered. Unpaid family leave is commonly offered due to the fact that employers don't want to lose a quality employee from childbirth, adoption, or caring for a loved one. So if you employ less than 50 employees, you're not required to offer this, but it is something that does help retain people. The most common leaves are pregnancy, parental leave, and disability for medical leave, which disability or medical leave consists of time a woman is able to take off during a pregnancy, after a childbirth, or recovery from that. Parental leave is time taken by either male or female to take care of a new child, a newly adopted child, or to take care of parents or family members who need assistance. Normally it's called paternity leave if the father takes off the time. Vacation time is a fairly common thing that's offered by employers. And it's important, if you're going to offer vacation time, that you really think about this. Again, you're not required to offer it, but it's a good start to providing employees additional incentive. Studies have shown that if an employee has time off that they know that they can take, they are more productive. If they don't have any potential of taking time off, they can get burnt out. We do recommend that you establish a policy, though. The who and the how. Who can take the time off? How do they qualify for that? When are they eligible for that? That sort of thing. You might say that at the end of the first year of service, you get the employee gets 1 week or 40 hours of vacation. After 2 years, they get 2 weeks or 80 hours. After 5 years, they get 3 weeks, etc. It can be an increasing scale. You can make it different for part-time and full-time employees. It's totally at your discretion, but you should have a written policy so that employees understand how it works. It looks like we might have a question. Christine, do you have that for us?
No, Waldo, I don't see a question in the panel.
Okay.
I just added some things to the chat box.
All right. So holiday pay is another thing you want to consider. I pose these three questions. If you're going to pay holiday, if you're looking at it, is your business a critical service that needs to be open on a holiday? If you're looking at, if you're offering medical care, say in-home medical care, yes, you're probably going to need an employee on holidays to take care of your clients. If you are a service industry like a restaurant or a motel, you probably are going to have to be open on holidays. But if you're a Main Street store, is it really essential that you be open that day? And if you're not going to be open, then you don't have to offer it as a paid day for the employee. Making the decision to be open or not, will you generate enough business that day to justify being open? And then how many holidays will you recognize in your business? Those are things, all things you have to take into consideration. Health and medical care or health insurance. Offering health insurance is very expensive. It can be complicated and sensitive, but if you want to really look at growing your business through employees and you want to attract the quality employees, it's something that you should consider. Sorry about that. Should consider to help improve employee productivity. And there are some added benefits. You can get some tax credits and deductions on your taxes for offering it. If you have more than 50 employees, then you are required to offer some type of health insurance assistance. But if you're under 50 employees, it's not mandatory. You might want to look at the SOHO entrepreneurs program for small businesses. It can be an economical way to offer this benefit to your employees. In Wyoming, there are two options through the healthcare.gov or Affordable Care Act. There are individual health insurance plans and through the Small Business Health Options Program, or there you can also go through Blue Cross Blue Shield. They have different levels, bronze, silver, gold, and platinum. You need to really look at those to see what the benefits are, what they can do for your employees, what the tax credits are, and how much it's going to cost. Other options are private healthcare exchanges, or you can do a direct purchase of insurance. A private health insurance exchange is also called a purchasing alliance. It's a privatized version of the shop marketplace. You pick a private health exchange to work with, paying a small amount per employee depending on what percentage of their medical costs you want to cover. Your employees will get to pick and choose their specific plans based on those offered by the alliance. The exchanges are often organized through the Chamber of Commerce, so check with your chamber in your community if you're interested in that. It can be a time-consuming process. Means you're purchasing a small group health insurance plan directly from a provider, so you have to do your research, but it can save you money over other options. And then finally, you can subsidize a portion of your employees' individual plans. They can go out through the healthcare.gov, obtain a plan of their own, and then you can pay a portion of that, which a lot of employers do, simply because it's the least expensive, or it can be an inexpensive way, and then the employee gets exactly what kind of coverage they want. Offering sick leave and personal leave usually go kind of hand in hand with your vacation time. There is no law in Wyoming that requires private sector employers to provide employees sick leave or paid or unpaid, but generally speaking, I would be wise to offer this rather than have an employee come to work sick, infect your other employees or clients, customers coming in. So it's sometimes better when people are sick, they just stay home. And offering sick leave gives them that option. This, again, can help with productivity and help just with a general work environment. Personal leave is can be used for the various things. Also, a part of this, you might want to consider thinking about like paid leave for jury duty, that sort of thing. So if the employee would rather be at work but can't, an incentive to keeping them happy would be to pay them for those days. Retirement plans, these are, you don't see too many small businesses offering these, but it is something that you can help your employee with. There are several plans available to small business owners like IRAs and 401ks. You can get a tax credit of up to $500 if you set up a plan for your employees. But again, where do you start? You need to consider, is it just you or you an employee that you're covering? You need to look at the cost of setting the plan up, and if you're going to have to pay somebody to administer the plan, you have to decide as an employer what your contributions are going to be, and are you going to let the employee make contributions as well? I know some of the places I've worked, they've said if you can put up to 6% of your salary into the retirement plan, and for every 2% you put in, we'll match with 1%. So if I put in the maximum 6%, they would put in 3%. That's something that some larger employers do. And there are several different types. As you can see, there's the MYRA or MYRA. It's designed mostly for young savers and self-employed. You can open an account for as little as $25, contribute as little as $2 at a time. The advantage of this is you can take your money out with no penalties, although you will pay taxes on the earnings when you withdraw it if you take it out before you're 59 and a half. You can't invest more than $15,000 total in this, and your investments are limited to government bonds, which sometimes have limited returns on investments. SEP IRAs or self-employed IRAs are for small business owners and for self-employed people. It's a no-cost, easy to set up retirement plan. You can contribute any amount each year up to $54,000, but you must contribute the same percentage amount to yourself and to other employees as well. So whatever you do for yourself, you have to do for your employees. The simple IRA, for businesses with less than 100 employees, these are designed to help both the employer and the employee contribute to the employee's retirement. As with the SEP, employer contributions are tax deductible and employee contributions can be made pre-tax to a limit of $12,500. The paperwork is fairly minimal, and there are a lot of investment brokers that can help you with that. Simple 401ks. 401k is a specific type of retirement plan. It's similar to the simple IRA, has the same setup costs and the characteristics. You do have a separate form you have to file with the IRS. if your plan exceeds more than $250,000. And the good thing is that many financial service firms will not charge a setup or maintenance fee either other than the account, what's on the account itself. Pension defined benefits and cash plan, balance plan with 401k are another options. They're not, I'm not real familiar with them. And so, and I don't know how common they are. I haven't seen them used a lot. So we've looked at the required benefits. We've looked at the optional benefits, giving you some ideas. Now let's get down to some mathematics. And I've just worked up a simple calculation, a simple example here. Say you're looking at hiring a part-time employee, one employee. They're going to work 20 hours a week. You're going to pay them $10 an hour. You're going to give them 10 days vacation time per year. That's probably pretty generous, but you want to help them out. You're also going to give them 5 days of sick or personal leave per year. You're not going to provide any insurance or retirement account, but you are going to pay them for the following 8 holidays. Whether you're open or not, you're going to pay them for New Year's Day, Martin Luther King Day, Memorial Day, 4th of July, Labor Day, Veterans Day, Thanksgiving Day, and Christmas. They're going to have those days off with pay. So 20 hours a week for 52 weeks is a total of 1,040 hours per year. That's the total hours based upon their schedule. You're going to provide them 40 hours per year of vacation time. That's 5. My calculations are wrong, but say this is 5 days at 8 hours per day. So 5 days vacation time. They're going to get 4 holidays per year, and you're going to provide them 20 hours of sick leave per year. I thought I had my my charts matching, but they're not. But if we look at that, out of the 1,040 hours per year, the employee is going to actually work in your shop 948 hours, or 91% of that time. The other 8.85% of that time, they're going to be getting paid, but not on the premises. $1,040 hours per year at $10 an hour is $10,400. That is the base wage. You're going to pay 6.2% Social Security up to the first $127,000 that they earn. So 6.2% of $10,400 is $644.80. Medicare is 1.5%. Same thing. The cost per year is $150.80. Federal unemployment tax is 0.6% in this example on the first $7,000. So you're going to pay $42 for that. State unemployment insurance is 2.83%. This is just, I just picked an industry and chose that figure. So it would be based upon your industry. We're looking at $294.32 there. And then workers' compensation, again, is going to be based upon your industry, your wages. For this example, I'm using 1.49%. So that's $154.96. Let's add all that up. They're actually going to work 948 hours for you. You're going to pay them $10 an hour for that. So the wages for actual work completed is $9,480. Your paid time off in this example we said was 92 hours at $10 an hour is $920. From the previous slide, your FICA insurance, that's Medicare and Social Security, $795.60. Federal unemployment insurance is $42. State unemployment insurance is $294.32. And workers' compensation insurance is $154.96. We add all that up, and the cost for this employee on an annual basis is $11,686.88. Your $10 an hour employee has a 23.28% increase for fringe benefits, so the actual cost is $12.33 an hour. I went through that rather quickly. If you'd like a copy of these slides, you can let me know so that you can review these. This will also be on our YouTube channel. But with that, with all this information I've thrown out, what questions do you have?
So Waldo, when you look at calculating and you see that a $10 an hour employee is costing you, almost $2.50, more than that, are those the only costs that you should consider, or should you be projecting what additional benefits you might provide to those employees in the future? Because of course things change according to your policy. Is that something that you recommend? Like, well, this year they're going to get 1 week of vacation, but if I retain them, then in the next year when they get 2 or 3 weeks of vacation, then that employee actually costs me more. So do you think that's a calculation they should be going back to?
Yes, I think you should review that on a regular basis, if not at least annually. What's it going to cost you for your employees this year? What changes do I need to make, or do I want to make, or do I have to make in order to retain those employees? And there are other costs, and this was pretty simple. So when you start adding health insurance in there, you start adding retirement accounts in there, that cost is going to be more than that extra $2.50. It's going to start adding up pretty fast, and that's why you really want to take a look at it. Also, stop to think about this. If you're hiring employees, you're going to have to advertise somehow for them, and so that's going to be a cost. Now it'll be maybe a one-time, but you might want to factor that into your thinking as well. And then once you hire that employee, you're going to need to train them. It's going to be a little bit more demand on your time until they're trained. How do you put a price tag on that? Well, you can figure out what your wage is and maybe factor that in for the week or 2 weeks it takes. But that is something additional to take into consideration as you're looking at hiring people. And
okay.
If I've had a couple of instances where I've talked with clients, existing clients that we have. One of them I was counseling this morning. She said, "Yes, I hired these people. It spent a week training them, and then a week later they decided, oh, this isn't worth it. I'm out of here," and so they quit. And then you turn around and have to hire someone all over again. So that's the reason, kind of why I asked the questions at the beginning. Is, are you ready? Are you really ready to hire someone? And will it benefit you to have that extra help? Once you get them hired, once you get them trained, then you have to decide how are you going to retain them so you don't have to keep going through this process over and over again.
Yeah. So Waldo, there's another question here. What does it cost to get checks sent out to employees and have those taxes paid? Is there an industry standard or average that people pay for that service? And Waldo, I can speak that from a service that I use for my own business, but if you have an answer for that, go ahead.
Go ahead.
So Megan, you know, there are different companies that offer payroll service, and I think that's what you're pointing to. And so one of the companies that I've used in the past, again, I'm not promoting, you know, any one individual company, but I've used a national company called Paychex, and they handle payroll. They've handled payroll for a couple different businesses that I've had. And usually the way the rates are structured with any kind of payroll service you use is it's not necessarily based on the industry, but it's more based on the number of employees that are being processed in a payroll and the number of payrolls that you're going to do. So I've had a business where I pay my employees monthly. I've also had a business where I pay my employees weekly. The more times they cut payroll for your company, the more charges you're going to incur. And the more people they're paying, the more charges you're going to incur. So one of my businesses where I paid employees monthly, but I had up to 25, employees at any given check date. That might cost me, I think at the time, it cost me about $100 to process a payroll. I switched and I have less than 5 employees now, but when we're in season, we're paying those 5 employees weekly. And so weekly payroll costs me $65. This company invoices me $65 every time I run payroll. In addition to that, when they will issue quarterly reports for you, so they'll charge you for that quarterly reporting as well. And again, that's based on the number of employees that they're reporting for. So the state of Wyoming requires that you submit reports to Workman's Comp, Workforce Services for Workman's Comp and state unemployment insurance. That can be a joint form that you complete and submit that. If that payroll company does that for you, that's going to be a fee. In addition to that, there's a 941 form that has to get filled out on a quarterly basis, and that's a federal report that goes in that says these are the payroll taxes that were paid. So as a small business owner, one of the reasons that I choose to use a payroll company, you can do this often. Your accountant, if you have a CPA, an accounting firm or a bookkeeping service is willing to run payroll for you. The reason that I like the larger companies is because then my employees actually have online access and they can pull up their own paycheck stubs. They also offer direct deposit. So there's some benefits to using bigger companies so that you're not having to do physical checks and distribute physical checks to your employees. But all of those service fees are negotiable. So I'd encourage you to reach out to your local CPA or a bookkeeping service or even the national companies, talk to those sales reps or the people that can give you pricing, and understand what all of the fees could potentially be. Because it's not just running payroll, it's also doing the quarterly reports, the annual reports, and then remember, if you have employees, you have to send out W-2s. And so people should have been receiving W-2s prior to January 31st of this year for the 2017 calendar year. That becomes your responsibility as well. So if you use a payroll company, that company will then send out all that documentation for you. But that's a great question, and you should build that into your costs.
And I'll add on to that a little bit. I've been in charge of an organization that had 3 employees, and I did the calculations and wrote the checks myself and did the reporting myself. But I'm a numbers person, so I enjoyed doing that. It wasn't a burden for me. But I also have worked with an organization that had as many as 12 to 15 employees during the summer months. And we had our accountant do all those calculations. They provided the information to me. I wrote the checks out, but then they did the quarterly reporting. They did the W-2s and all of that. So I would start with your accountant just to ask if they provide that service and what it costs. But like Christine said, I would certainly check other companies that provide that service to keep the cost down as much as possible. Because again, that's adding to the cost of that employee if you're paying for someone else to do all that work.
Okay, Waldo, I don't think we have any other questions today.
All right, so here's our contact information. Again, we are going to, this program has been recorded. We will upload it to our YouTube channel, and you can view that probably sometime tomorrow after we get it uploaded this afternoon. We do want to thank you for joining us today. Our next webinar will be March 22nd, so it's in 2 weeks. And Christine will be talking to us about direct selling. How do I do that will be our topic. We hope that you have time to join us for that one. We do again remind you that as you leave the webinar, you will be asked to complete a survey. Please do that. We appreciate your feedback. I know one of the questions is, do you have other topics you would like to see? And that gives us something to plan on for future webinars to try to meet your requirements or your requests. You can email or call either Christine or I if you have further questions. Contact me if you'd like a copy of the slides from this presentation, and I'd be happy to send those to you. But with that, we want to thank you again for joining us. Wish you all a good day, and we're getting ready for spring break here in Laramie at the University of Wyoming. So for those of you who happen to get next week off, have a great time, safe travels, and we hope to see you all again in 2 weeks. Thanks.